Hello, this is the TradeSite U.S. Stocks and Futures Market Preview for the week beginning Sunday, the 22nd of October, 2023, ending Friday, the 27th. We are entering that time of year where the time zone shifts start to happen, so we can expect next weekend Europe will change, and then the weekend after here in the U.S. So for a week, we'll be offset by an hour, not in sync with them compared to what we usually are, and that often throws off the markets a bit. In terms of other layout work, what I call layout work, or the schedule, no days off really. There's a Veterans Day bank holiday, but no days off really until Thanksgiving here in the U.S. So we've got a full month of trading ahead. Obviously, we're past options expiration for October, and we have the month-end statements printing next week on Halloween on Tuesday. But in terms of just pure trading ability, we're pretty wide open here for a while. Here's the dollar index daily chart as usual. We'll start here. Dead flat for the last month, not much to look at. And again, we have dropped Forex. We follow the pound and euro futures now on the daily charts, looking for counts and signals and patterns. There's nothing here on the pound, also been flat for a month. Euro flat for a month. ES front month futures contract. This is the daily chart of the broad market and futures forum. Proper way to look at the market. This looks ugly. This is an inverted cup and handle. Um, we're going to break the lows pretty quickly here of October, and that'll take us, to the lows of the last 3 months, basically, right? And then under that 4150, that's where things start to get a little bit dangerous. Here's the S&P cash index, looks about the same. The counts are the same. Nasdaq 100 has been holding up better, obviously, with all the techs, but cracking those September lows, and we're very close to it. It could be a free fall from there. Russell 2000, obviously these smaller cap stocks more affected by higher interest rates. So new lows for the year on the Russell 2000 as rates continue to run. Crude oil now has a 13th sell signal on the daily. It is hanging near the highs, but it's got a sell signal, so let's keep an eye on that. Gold made a big move over the last 2 weeks. And, that's due to the inflationary numbers, but it's interesting because it sure didn't care before when we were raising rates. But now that the rates are spiraling a little bit out of control, it's really on the run. Bitcoin back near 30,000, improving with the rate situation. TLT, the 20-year bond ETF, new lows, and as they say, bonds down, rates up. This is candle 11 if I go to projection mode on the daily, so two more candles down and we get the Seeker 13 buy signal on the bonds. That'll be interesting. The VIX spikes to 2171. It's that time of year, folks. Third week of October, very common time for market. We'll call them mini crashes, and definitely pullbacks. So let's keep an eye on that. The advanced decline ratio was kind of all over the board this week, back and forth. The trend. Now this was interesting. On Tuesday, the 10-day moving average, which is the orange line, closed below the 0.85 level, which is the blue line. And when that happens, that is a sell signal on the broad market. And so that left Wednesday, Thursday, and Friday. We were down all those days. So that signal did, in fact, work. We'll look at that right here. Because this is the ES inter-week or inter-day, a 10-minute candle starting the prior Friday. So we got the gap up Monday, and went a little higher, and then dead flat, so flat. Tuesday gap down, filled that gap, and closed just down a couple points for the day. Wednesday, small gap down that never filled. Now remember, Tuesday is where we get that sell signal on the broad market, and now boom, Wednesday gap down and eventually pushed lower. Thursday flat opening. We swing around when the Fed Chairman Powell speaks, but we close lower. Friday, we close lower. Somewhere in there is also the options unraveling move, since that was expiration on Friday. But again, that decline on the S&P and here on the Nasdaq coming right off of that trend signal that we got on Tuesday. In terms of the bigger stocks we follow and their charts looking for patterns and counts, what you're going to see is there's no counts, but you're going to find a lot of breakdown points on some of these. So Apple's well off the highs. It's down about 12.5% since the highs. Doesn't look quite as bad as some of these other ones. Amazon's got a lot of room to drop if it gets under that September low. Meta's been holding up better, but starting to show signs of rolling over at least. Same with Google, just made new highs recently. Goldman Sachs, on the other hand, sitting at lows. That's not pretty. But the banks, you expect that right now. Netflix gapped up on earnings and held it on Friday despite the market decline. So it's one of the few stocks that held up there. But here we go with Tesla. This is, who you would not want to own Tesla right now. This is an ugly looking chart, and they've basically just said they've got some issues. So we'll, I would stay away from Tesla as much as possible. Nvidia, not good either. This is not a great looking chart, to be honest. And then Zoom, this is an inverted cup. I mean, we're going to be calling a lot of these in the room this week, I would expect, because there's just some ugly looking stuff here. And I would imagine a couple of those last three daily charts will end up being trade calls. Hopefully, we don't just gap past the triggers so we can actually get involved in the trades, but it looks like a good time to get moving in the markets. Now, in terms of economic data this week, New Zealand's on bank holiday. No data here in the U.S. on Monday. Tuesday, you got the flash manufacturing and services PMI numbers from around the world as you make your way over here, and then we have ours at 9:45 a.m. Eastern Time. Wednesday, there's a rate announcement out of Canada. New home sales here in the U.S. They're both at 10 a.m. Eastern. Crude oil inventory is at 10:30. Fed Chair Powell speaks after the market on Wednesday. On Thursday, you've got the first look at GDP for the third quarter. They're expecting a pretty big number. We'll see what that looks like. And we've got the initial and continuing jobless claims numbers. We've got core durable goods and goods trade balance and preliminary wholesale inventories. All those are at 8:30 a.m. By the way, that comes off of the Bank of the ECB, the European Bank, doing their rate announcement a couple hours earlier, and then their press conference. We've got pending home sales at 10 a.m., natty gas at 10:30, and then you jump to Thursday where we've got PC price index, personal income and spending at 8:30, and revised University of Michigan sentiment at 10, and then, like I said, the time change after that. So the biggest thing of the week will be that look at the GDP number. Obviously, watch bonds and continue to see where those go. And it's just that time of year where markets do kind of tend to sell off. So we're starting to see signs of it, and there's definitely some ugliness to those chart patterns. Not a lot of support for a ways back if we start to roll. So keep an eye on that. Charts as usual brought to you by NinjaTrader. If you have not yet taken a trial of our services, feel free to do so. We will help you out for a couple of weeks. Have a great trading week. We'll see you in the lab.